Welcome to the Deep Dive, where we cut through the noise of information and extract the most important insights to help you stay well informed. Today, we're diving deep into the latest from T-Mobile US, specifically their Q2 2025 earnings call and their financial reports.
That's right.
Our mission for you today is really to unpack what made this quarter truly fantastic for T-Mobile, understand their bold strategic moves in what's, a highly competitive landscape,
Always is.
and ultimately see what all of this means for you, the customer, and, well, the broader world of telecommunications.
Exactly. We'll explore how they're not just growing, but achieving these record-breaking numbers, and also how they're tackling those critical network perception challenges and making pretty significant plays in entirely new areas like fiber broadband and business services,
Right.
all while, aiming to deliver substantial value.
Okay, let's unpack this right away then. Mike Sievert, T-Mobile CEO, used a pretty strong word to describe their Q2 2025 results. Fantastic. What exactly stood out as so fantastic in their performance?
Well, what's truly fascinating here is the sheer scale of their achievement, and maybe more importantly, the breadth of it. T-Mobile didn't just meet expectations, they actually led the entire industry.
The whole industry.
Yeah, in both customer and financial growth across multiple key metrics, they actually shattered their own past records, made this their greatest Q2 for growth ever in the company's, long history.
Greatest Q2 ever.
Yeah. Specifically, they hit their best Q2 ever for adding new postpaid phone lines, your standard mobile phone customer. They also had their best Q2 for total postpaid net additions, which includes not just phones, but tablets, smartwatches, other connected devices.
Okay.
Both of those numbers, and their gross additions too, were up double digits year over year,
Wow.
even against what was a very strong 2024 comparison period.
So it's clear they're attracting a lot of new users, but was it just about the sheer quantity of new lines? Or are they seeing a shift in the type of customers too?
Absolutely, and this where it gets really interesting for their long-term strategy. Their postpaid account growth actually accelerated year over year,
Okay.
and they saw their share of households grow across every single major market, including, significantly, a push into smaller markets and rural areas as well.
Right, so wider reach.
Exactly. This isn't just growth, it's broad-based growth. They're expanding their footprint pretty much everywhere.
Mm.
But maybe more critically, the quality of their customer base continues to improve, and at a rapid pace. They reported average revenue per account, or ARPA,
ARPA, right?
up over 5%. That's actually their highest ARPA growth in 8 years.
8 years, that's huge.
It really is. And what this indicates is that customers are, as they put it, self-selecting up the rate card.
Meaning choosing the more expensive plans.
Exactly. Choosing more premium, higher value plans.
That's a big shift, isn't it? Suggest customers are seeing more value in T-Mobile's top-tier offerings. Can you give us an example of how that's playing out?
Yeah, definitely. A compelling new stat they shared was this. After launching their new rate plans back in April,
Okay.
customers were selecting their new Experience Beyond plan at more than double the rate of the old Go 5G Next plan from just a year ago.
Double the rate.
More than double. And that selection rate is up over 50% in just 1 quarter.
Wow.
So it suggests that plan, with its unlimited premium data, the international benefits, it's really resonating.
Clearly justifying a higher price for those customers.
Seems so. And their business group is also breaking growth records, again, leading the industry in net additions there, too.
Okay. The network, T-Mobile constantly calls it America's best network, seems to be a core pillar of this growth strategy. But how does that claim stack up against, what the broader market actually perceives? Is there a gap?
This raises a really important question, and it's a fascinating challenge for them. While T-Mobile has seen a significant increase in customers who do switch, citing the network as their reason for joining, the reality is that the vast majority of potential customers, people considering switching carriers,
Yeah.
they still don't perceive T-Mobile as having the best network. Only about 20% of all potential switchers believe they do.
Only 20%. Wow, that perception gap certainly sounds like a massive opportunity, but also, well, an incredibly tough marketing challenge.
It absolutely is.
So what are they doing that's genuinely new to try and change that perception and, widen their actual network lead?
It truly is an enormous runway for them to capture if they can shift that perception.
Yeah.
And changing network perception has become a major focus. They're trying to convey this message to consumers and businesses in, quote, really innovative ways, basically aiming for everyone in America to understand why now is the time to switch.
And what about the substance? What are they actually doing to the network?
Right, perception needs reality behind it.
Hmm.
On the substance, they are continuously pushing across multiple strategies to widen their lead. They've already lit up, I think, 1,000 new sites this year alone. Yeah, with plans for nearly 4,000 by the end of the year. They were the first carrier to roll out things like nationwide 5G Advanced.
Okay, what does that mean practically?
Well, it allows for things like even more dedicated, ultra-low latency connections, really good for critical services, and automated slicing capabilities, which lets businesses create these virtual, custom-tailored networks on T-Mobile's infrastructure.
Interesting.
They're also using higher-order carrier aggregation, basically combining different radio frequencies to get much faster speeds and more efficient data flow.
Gotcha.
And we're seeing concrete examples of this performance translating into real-world applications, like the City of Miami Police Department, the LA County Fire Department, City of El Paso. They're all choosing T-Mobile.
And citing the network.
Specifically noting how their 5G Advanced capabilities deliver, quote, unparalleled performance for first responders who need that mission-critical connectivity.
Okay. And how does their new T-satellite service fit into this network expansion and the perception battle?
Yeah, the T-satellite service, it just launched, available for like $10 a month. It's definitely seen internally as a truly differentiated service that people notice.
Something unique.
Exactly. They're optimistic about how they can monetize this, either through, customers moving to plans that include it or as a premium add-on. They learned a lot from the beta period.
And has it shown any real-world impact yet?
It has, actually.
Yeah.
What's compelling is its immediate impact. They mentioned this new service proved its value, played an important role during those horrific floods in Texas just a few weeks ago.
Wow, providing connectivity when other things were down.
Precisely, when traditional infrastructure was out. And for businesses, for enterprises, they're seeing strong interest for both network slicing and T-satellite. From first responders, state and local governments, industries like oil and gas.
Places needing connection way out there.
Yeah, needing connectivity in areas untouched by any carrier. And businesses are clearly willing to pay for guaranteed service levels for that kind of mission-critical stuff.
Okay, so T-Mobile is clearly not standing still in their core mobile business. But they're venturing well beyond it, too. Let's talk about some of these significant new partnerships and acquisitions. Where are they expanding their reach now?
Yeah, this is where their strategy truly diversifies, showing a kind of broader vision beyond just mobile phones. First, they just announced a new multi-year partnership with a major cable provider.
Cable. Interesting.
Doing what?
Offering mobile service specifically to small and mid-market businesses, or SMBs. This looks like a strategic move to supercharge growth in an area where they've had, frankly, little exposure historically.
Right.
Their current strength is more in the very small businesses and then the really large enterprises, like over 1,000 lines.
So this targets the middle.
Exactly. This deal strategically targets that lucrative middle ground, aiming for incremental revenue.
And it sounds like they're making equally big waves in the home broadband space, too. Not just mobile broadband, but actual fiber.
Absolutely. T-Mobile has, kind of quietly, become the 5th largest internet service provider in the country already. 5th largest. Wow.
Yeah. And they officially launched their own T-Fiber service last month in certain markets and through wholesale agreements. They report it's going great. Their thesis is that their unique assets, existing customer relationships, brand recognition, can help them penetrate these markets.
So they expect growth there.
They expect to add 100,000 new FiberNet customers this year alone, mostly in the second half. And they've stated very clearly they are very open to looking at investments in fiber, and they like pure play fiber assets.
And they haven't just been they've been busy with some major joint ventures in the fiber space too, right? Can you shed some light on those?
Yes, these are really significant moves involving billions of dollars. On April 1st, 2025, they completed a joint acquisition of Lumos.
Lumos, okay.
Investing $932 million for a 50% equity interest and gaining 97,000 existing fiber customers. Plus, there's another $500 million capital contribution expected down the line between 2027 and 2028.
Okay, that's one.
And then there's Metronet. That deal was actually expected to close today, July 24th, 2025.
Really?
Yeah, very timely. They plan to invest approximately $4.6 billion to acquire a 50% equity interest and all existing residential fiber customers from Metronet.
So they're buying the customers too.
Yes. The key here for both Lumos and Metronet is that these partnerships transition the acquired entities to a wholesale model. T-Mobile owns the direct customer relationships. They are spending big to become a major fiber player.
Beyond these huge new fiber ventures, they've been busy with other acquisitions and even a major divestiture. It's a lot of moving parts.
Indeed, it's a very dynamic period for them. Lots of activity. They completed the acquisition of Vistar Media Inc. for $621 million back in February 2025, and Bliss Holdco Limited for $180 million in March 2025.
What are those for?
Both of these are aimed at significantly enhancing their advertising technology capabilities, basically allowing them to better monetize customer data and improve ad targeting.
Ah, the ad tech play. Okay.
Yeah. Looking back just a bit further, Q2 2024, they acquired 3.5 million prepaid customers through that Keen acquisition.
Which included Mint Mobile, right?
That's the one. Famously included Mint Mobile. And the earnout calculation for that deal was actually amended recently on June 30th, indicating its ongoing financial impact.
Okay. And the divestiture, selling something off.
Yes, a significant one. They reached an agreement with Green Management to sell their entire portfolio of 800 megahertz licenses.
All their 800 megahertz, what did they get?
They got $2.9 billion in cash, plus Grain's 600 megahertz licenses and potential future proceeds, too.
So swapping low-band spectrum, essentially.
Kind of. Think of 800 megahertz as crucial for broad coverage reach, while 600 megahertz, which they're getting more of, is key for deeper indoor penetration and expanding their 5G footprint.
Makes sense. Any financial impact noted?
Yeah, they anticipate this deal generating about $850 million in incremental income taxes. It's expected to close Q4 2025 or maybe Q1 2026. And importantly, these net proceeds are actually incremental upside to their previous financial guidance.
So extra cash.
Extra cash. And finally, the really significant U.S. cellular acquisition, announced May 24th, 2024.
Feels like a while ago.
It does. But it's expected to close very soon now, August 1st, 2025.
Okay, what does that involve again?
Acquiring most of U.S. Cellular's wireless operations and select spectrum assets for about $4.4 billion in cash and assumed debt. Notably, T-Mobile will also lease space on at least 2,100 towers that U.S. Cellular keeps.
Adding lease costs.
Right, adding about $1.4 billion in future minimum lease payments over 15 years. Oh, and they also recently announced acquiring Iowa Entity's wireless assets for $170 million, expected to close concurrently with U.S. Cellular.
So really consolidating in certain areas.
Exactly, expanding their core mobile coverage and customer base, particularly in areas U.S. Cellular was strong.
So we've covered the record growth, the network focus, and these really ambitious new ventures and acquisitions. What does this all boil down to for their financial bottom line, and how are they creating value for their shareholders through all this?
Well, the financial results really seem to underscore the success of this multifaceted strategy. Postpaid service revenues grew 9% year over year. That's actually an acceleration from Q1, showing strong momentum in their core business.
9% is strong.
Very strong. Total service revenues grew 6%, which is a rate well over double that of their closest competitors. Really highlights their industry leadership right now.
And profitability.
Their core adjusted EBITDA growth, a key measure of operational profit, was 6% year over year. And perhaps most importantly for investors, they delivered $4.6 billion in adjusted free cash flow.
Free cash flow, right.
Which is a new Q2 record for them. This translates to an industry-leading adjusted free cash flow conversion from service revenues of 26%. Meaning a really healthy chunk. Over a quarter of their service revenue is turning into actual cash they can use, for investment, debt reduction, or shareholder returns.
It sounds like a pretty compelling value proposition then, both for customers given the growth and for investors looking at those financials.
It is. Their overall message seems to be that T-Mobile's value proposition, they keep saying best network, best value, best experiences, is an exceptional combination that's just driving results.
And they feel it can continue.
They truly believe their strategy is differentiated, it's durable, and it has, quote, tons of room to run. They see growth opportunities pretty much everywhere they look. And from a shareholder perspective, they're actively returning capital. They have that $14.0 billion stockholder return program authorized through the end of 2025.
How much have they used?
As of June 30th, 2025, they had paid $2.0 billion in cash dividends just this year and repurchased $4.9 billion of their common stock this year.
So significant returns already.
Definitely. And as of mid-July, they still had $6.6 billion remaining under this pretty robust program.
Okay, so T-Mobile is clearly firing on all cylinders, you could say, expanding its reach, investing heavily in its network, and these bold new services. They're truly making aggressive strategic moves in what's still a very dynamic market.
Yeah, their latest deep dive into their own financial and operational performance really paints a picture of a company actively trying to shape its future, not just, reacting to market trends. They're investing billions to diversify their revenue streams and really try to solidify their position for the long haul.
Which leads us to a provocative thought for you, our listener, to consider. Given T-Mobile's really aggressive expansion into fiber, into new business services, and even satellite connectivity, how will these new ventures reshape the entire telecommunications landscape beyond just mobile? And what unexpected benefits or perhaps challenges might arise from this diversification for consumers like you? Something to think about. We encourage you to keep exploring, keep questioning, and keep learning.